Hopefully might. All right, awesome. We are live. Cool. We'll give it a couple minutes for everybody to hop on and join us here. And do you have any big plans this weekend, Tanner?
I'm actually studying for a test that I have to take tomorrow morning, this
Oh my
afternoon.
gosh,
So exciting. Yeah, not
that's
really
cool.
looking forward to that, but got to do what you got to do. It is for my expansion into other states. So,
Yeah,
just not being in Virginia, so I'll be licensed in South Carolina, North Carolina, Florida, Texas, and our beloved home state of Washington, Jess.
yes, that's awesome. I am so excited for you. This is going to be huge. And
Thank you.
yeah, make this video even more applicable because we're going to
That
hit some of like major areas for our military veteran population. So
That is correct. And, VA IRRLs are nice because you can do them anywhere and the rules don't change really. So
I
that's,
know.
that's awesome.
I am super excited to dig into this. We're going to give like just a couple more minutes, see if we get some. And for those of you guys tuning in, please make sure to drop comments, questions in the comment section below. We'll make sure to try to get to everybody. If we miss you while we're live, we'll definitely get back to you with answers so that all of your questions are covered. Awesome. I know I was going to try to go do a little hike this weekend before some afternoon appointments, but I think I'm going to just let that roll. I know the weather is like really iffy and I don't know. I don't mind hiking in some drizzle, but downpour, I could maybe
Uh,
pass on that.
yeah, you know what I would say, since you and I are both from the rainier portion of Washington State, is
Yeah.
it your thoughts that the rain here is harder, like versus a mist that we would get a lot?
Absolutely. I tell
Okay.
people that all the time because they're like, oh,
I
you're
didn't
from
make that up
Washington.
in my head.
No, yes, I know. Like here, it's like sheeting down. Washington, we always called it like the doom and gloom. It was just misty and dark and gross all the time. So,
Right, right.
yeah.
Yeah. Then I'm not
Well,
alone in my thoughts, but
no, you are not alone in that. Yeah.
I feel like
Well,
here
okay.
you catch the wrong moment. You just look like you went through the car wash, even if you were out there for 30 seconds. And nobody moves faster in Virginia than when they're running to their car when it started like busting out rain.
I know. And I think it's funny too, because, back in Washington, like we always wore jackets. No one had an umbrella. Like that was like, oh, you're a foreigner. Like we don't use
Right.
umbrellas. But now in Virginia, I feel like I can get away with it because I'm not, no one knows I'm a
Right.
Seattle area native. So I can do it. But, well,
Exactly.
just a recap for those of you joining us, we are deep diving into a really cool feature of the VA loan, which is the IRRL, interest rate reduction loan. And I have Tanner Mulvihill here joining me from Bayfield Home Loans, local here in our area, which is awesome. But Tanner, I know a lot of people, everyone is so concerned with the rates right now. Of course, that's a huge topic of conversation across like every platform, the news, et
Mhm.
cetera. And we see a lot of agents and mortgage officers saying, like date the rate and the rates can change and blah, blah, blah. So dig into us for the people out there who either have a VA loan or will be using a VA loan. Talk to us a little bit about the interest rate reduction loan opportunity and what that
Sure.
is.
Yeah, so one of the maybe the biggest benefit of a VA loan is you have the ability to refinance to lower your interest rate. And then, unlike a traditional refinance, a VA IRRL has much less paperwork.
Okay.
It costs less, and it just allows the veteran to take advantage of the lower interest rate and get a lower payment. So one of the nice things, for example, let's say that you purchased a home at the peak of our market and maybe there's some appraisal issues that you could
Right.
potentially run into on value. On a VA IRRL, there's no appraisal. So you're not worried about like, well, I bought it for 650 and it's probably worth 655 now or something like that, but it's hard to say with an appraiser. We don't have that problem. So that's a
Okay.
nice feature of the VA IRRL. Another thing, you don't have to provide pay stubs, bank statements, W-2s. All those are gone. Basically, we are checking to make sure that you have good credit and you've been paying your mortgage on time,
Okay.
and that's it. They are beautiful.
That is awesome. And I know that I'm sure people are like, well, how much is it going to cost me? Can you talk a little bit about, the fees that may or may not be involved in doing that process?
Sure. So it depends on who you use. If you are using a lender that Navy Fed, if you're using a lender like that where there are a lot of fees associated with the transaction, then yes, you are going to have a high amount of closing costs.
Okay.
Now, if you're using somebody who's local, somebody who frankly is probably looking out for you a little bit more, your fees are going to be less. In a lot of cases, we did closing cost, or excuse me, we did VA IRRLs during our last VA, the peak, at very minimal closing costs. Most of the time, the escrow that they would get back would cover the closing costs, and that's if we didn't just cover them outright. So it also comes down to the individual. Some people are very committed to getting the lowest humanly possible interest rate, and they're not afraid or don't mind paying for it. As someone who's in the business, that is not the route that I would ever do on a refinance, just so I say that.
Yeah. And I think something that you just said is really important because I want to make sure that, for the average consumer person listening. So what Tanner was mentioning is when you do a refinance, you're basically closing out your current loan, you're refinancing to a new loan. That amount is not, I think the important part is so every month you're paying into principal, interest, and into your escrow account. And if
Correct.
you've never sold a home before, never done a refinance, whatever the balance is in your escrow account, you get that back in like a literal check to you when that is closed out. So what Tanner was saying that your escrow would potentially cover all of your closing costs for the refinance is that
Yep.
you might pay some at closing on that refinance with Tanner, but then you're going to get that escrow check back from whoever your current processor is. And so a lot of times those cancel out. I mean, gosh, I think I've had even people get more back from their escrow than what they paid out. So it's a little bit of, extra fund money also.
Yeah, absolutely. And the thing to keep in mind on the escrow is when we're setting up the new loan, a new escrow is being created. So, if you do this 2 or 3 times over the next 5 years as rates continue to go down, then you're going to be continuing to get that money back. And I always advise my clients, take that escrow money and put it towards the principal. Like, just think about this for a minute. When you do a refinance, you also get to skip a mortgage payment in some cases too. So let's
Okay.
say I'm able to do a no closing cost refinance for you. Let's just say you owe $500,000 on the house, and I
Yeah.
refinance your house for $500,000. And not only that, you're going to get back your current escrow, which let's say has $3,000 in it,
Yeah.
and you get to skip a payment. So why not take that $3,000 and that skip payment and apply it towards your principal right away?
Absolutely. No, I think that makes a ton of sense. And I love that you brought up the fact that when you refinance, just like when you purchase, you might get to skip 1 or 2 months because that's a huge deal for somebody. I mean, imagine if you could like skip 2 months of a payment while also getting a lower payment because you've just refied to a lower rate. And
Yep.
so, circle this back to the beginning when we talk about dating the rate, especially for the folks who are currently have recently bought, are buying with a VA loan. Yeah, I know the rates are scary today, especially if you had been previously qualified in like the fours and didn't find that house. And now we're in the sixes or whatever, depending on the day, it's a little bit variable, but knowing that that could be short term. Tanner, can you go into a little bit? You also hit on something I think was important that you mentioned, 2, 3 times. So it sounds like there's no limit to how many interest rate reduction refinances that someone can do. Is that accurate?
That is correct. And,
Okay.
sometimes one thing I wanted to touch on, because sometimes people go, oh, well, I don't want to start over a 30-year fix over and over and over again, right?
Yeah.
Well, let's say the first time we do the 30-year fix, because you've been in the loan 2 years, and you're like, okay, well, I'm starting over, no problem. But maybe the next time we do it, we do a 25-year loan, and you're still saving money because the rates have dropped enough, but you were kind of okay with the payment to begin with, but now we're lowering the term of your mortgage. I've had clients in the past go from
Good
30
point.
to 25 to 20 to 15 in a period of the payment really didn't change. And now suddenly you're in a 15-year loan paying the same that you were, and you just took 15 years off the life of the loan. There's a lot of ways where if you're working with a local loan officer who's looking out for your best interest, or at least giving you ideas and different ways that you can maximize this, that's what you're looking for. Frankly, if you call a big box bank, you're going to talk to an order taker that doesn't care whether you do it this way or that way. They're not going to give you their opinion. They're just going to go, okay, whatever, and move forward. That
Right.
is not how I do business.
I think that's so important too, because there is that I just did a reel on this the other day on Instagram that most of us make a decision that's emotional first. And so sometimes we love, like, we maybe have a bank that we bank with, and so we go to them for things like this. And it's so important to be doing the research and interviewing and asking these questions. How much is this going to cost me? Because if there's other banks that are charging fees that people like you're not,
Right?
yeah, why would you pay more and have less service for the same option of using someone local?
That's right. I understand, and I think we all do that. Oh, well, it's easier. But frankly, with online banking now and every mortgage company being set up very similar, it's no easier or less easier than anybody else. And the process is, I would argue, smoother because unlike a big box bank, you can get a hold of me nights and weekends. You got a question, my team, we're there to help. And that's not something you're going to run into if you're one of your serial number is whatever you are online for the lender you're working with.
Right, absolutely. Now, I wanted to get a little bit nitty gritty in the last, 10 minutes here so I know that obviously people are probably like, well, this sounds too good to be true. And I know there are some stipulations, you can't close on a house today and refi tomorrow. And I believe, and correct me if I'm wrong, you have to have a certain percentage change in the interest rate. Can you talk about some of those finer details that someone should be aware of?
Yes, there's two big rules that have come out recently to be aware of. The first is that the interest rate has to go down by at least 0.5%. So if you're sitting at 6.5 today, it has to go down to 6 minimum, which is not that big of drop. But in most cases, you're doing it for a point or a 0.875 or something like that. The second big change that they've made to eliminate what they called churning is the loan has to have been in place for 210 days.
Okay.
That means when I close on this refinance, I cannot turn around 5 months later and get a new one because the VA they saw veterans, unfortunately, over and over, they would refinance, adding thousands of dollars to the back of the loan, and then they would do it again 5 months later, and then they would keep going. And there were lenders that were taking advantage of veterans that would do that. So the VA stopped that. 210 days, those are the two big rules.
Okay. But other than that, I mean, it's a pretty simple process. They connect with you, start the process, assuming those two criteria points are met. They need to be obviously employed, credit check, things like that. But
don't have to be employed.
Yeah. And it sounds like for the most part, you don't have to have, it's not like the original purchase. It's not going through a bunch of conditions and bank statements and submitting an LES or whatnot. It's really more straightforward than that. It's almost hands off for a lot.
Absolutely. The thought process is if the veteran can make the payment at 6.5%, they're going to be able to make it at 5.5% or whatever version of that we're going to run into.
Okay.
Yeah.
Well, that's huge. I think that I'm hoping our goal to everyone out there watching is really to ease your mind a little bit and provide information because it's so tough. And I know a lot of people are nervous about the rates right now. But I think a really important thing to just remember is that monthly payment, as long as you're comfortable with that monthly payment, that really needs to be your focus. And if you're using a VA loan, having this option, working with Tanner and doing the interest rate reduction loan in 210 days from now or a year from now, because we know that the rates are fluctuating. If we look at a graph over time, like we know that they've gone up and down. And it's just—
I'd like to address that real quick too, Jess. So I have been a loan officer now 19 years. I started in August of 2003. Awesome. And I can tell you that every 3 years, like clockwork, you're going to see a refinance opportunity. That's how it's been in the last 19 years of my career. I feel that's going to continue. So every 3 years, you have a chance to take advantage of a lower interest rate. Now, if you got the low rates that you got, when people were 3%, 2.5%, all stuff like that, yeah, we're not going down that low. But if you're
Right.
buying right now, in the next 3 years, you're going to have an opportunity to drop that payment. And I think, Jess, correct me if I'm wrong, but from my perspective, this is a great time to be a buyer because I can now
Absolutely.
get a home inspection. I'm not having to pay $75,000 over the list price on a home. I'm not competing against 30 other people out looking for a property. And
Absolutely.
there's a lot of advantages to be a buyer right now that you did not have a year ago, even if the rates were honestly better. Doesn't
Right.
matter if they're better if I can't find a house and I have to overbid by 50,000 to get it.
Oh, 1000%. And I think that's the biggest tricky part is this is an important conversation to be having because right now we were having honestly the same conversation with people a year and a half ago when rates were super low, 2.25, but you had to bid $100,000 over and like give up your firstborn to get a house. Well, again, it all just boils down to that monthly payment. And when there's options for our VA home loan users to, yeah, maybe today you're locking in at 6.5, but if that 3-year cycle comes to fruition, it's a temporary pain for such a bigger picture. If your goal is home ownership and you're like, well, I'm going to wait for the rates to drop again. Well, guess what? The sales prices are still going up. They're not going up 20%. We're going to be going back down to a more stable 3.5 to 4 is our area's more standard typical growth.
Yep.
But that doesn't mean that those are not changing. And how would you feel if the perfect house came on the market and you passed on it because you were so wrapped around the axle about 6.5%?
Yep.
If the house makes sense, the monthly payment makes sense, the rate, especially for our VA people out there using that VA loan, like refinance. And I know refinancing to a lower rate is not, there's obviously options for our FHA conventional. That's a whole nother topic for a different day. But, especially with folks who are thinking about, like, even if you're PCSing here and you're here for only 2 or 3 years, should I buy? Is now the right time? I would argue I'm getting closing costs for my clients right now.
Yep.
Those can be that funds from the seller could be used to buy down your rate. There's so many options outside the box to make everything work. And yes, I completely agree with you. Like, now we're getting home inspections. We're even able to get some offers in under list price. That was unheard of even 6 months ago almost. So it's still such a great time, especially if this is your dream to have home ownership. Refi in 3 years, keep the house, PCS back to North Carolina or Oceanside, wherever you're going, and rent it out, because that's the other thing is our rental market is dry as a bone. So there's just so much opportunity. And if you guys are tuning in now, we've been talking about the interest rate reduction loan for it's a VA specific opportunity. Make sure to join it, like rewatch the replay, drop a comment. We're monitoring those and would love to answer your questions. And we just want to make sure that people are really, really educated as we see this market shift back to pre-pandemic, like normal market, because there's a lot of fear mongering out there. And, use me as a resource, use Tanner as a resource to really get the real information, get the local information, and find out what's going on.
Well, Jess, the last point I wanted to touch on really quick is one of the advantages of being a client of mine is I don't just set it and forget it. I'm going to be reaching out to my clients on a regular basis, checking in, seeing how things are going, seeing if they have any home improvement items they need to do that I have a recommendation on. And I'm going to keep up on the rates for them. So when it is time to do the refinance and they can do it for a reduced cost, then I want to make sure that they are aware of that. So that's when I'm going to reach out and say, hey, now's your opportunity to take advantage of it. Don't wait until, or don't go with the letter you got in the mail that wants to charge you $20,000 for the same thing I'm going to do for 2. And that's the benefit of working with somebody who is grateful to have you as a client.
Yeah, and we just had a great comment from Donald. Hey, Donald, thank you for tuning in with us this morning. And he mentions his rate's 2.5, which is phenomenal. That's amazing. I'm so glad you obviously refied during that time period and mentioned you wouldn't benefit. And what I wanted to let you know too is that we covered this topic on a different call. We don't have time to dive into it, so take a peek or shoot me a text or a DM, or Tanner also. But I know a lot of people out there are like, well, I have a 2.5, like I'm never refinancing. But the VA also allows a cash out refi. So let's say you have all this equity in your house, and yes, you'd be going from a 2.5 to whatever the current rate is, but you could take maybe $50,000, $100,000 out in equity. Well, then what if you use that to buy 3 rental properties that cover themselves and your extra mortgage payment every month? Might be worth it, or to do a home project. I know a lot of people have been sitting on doing that fence, deck, etc., because they couldn't get anyone to do it in the last couple of years. Well, we're seeing that open up too. So there's a ton, like this huge opportunity window out there for people. Yeah, you might give up your 2.5%, but could you earn that back in so many more ways?
I got a better idea for you, Jess. How about instead of giving it up, you just make that property a rental and move on to the next one? Because a lot of times people don't know on VAs, you can have more than one VA loan at a time. And in our
Yes.
market, because we are such a high cost area, in Donald's case, sitting on 2.5%, that is outstanding. If he were to rent out that house, just as a guess, I'm guessing he's going to make $1,000 in rental income that he wouldn't, on that rate because it's so low. Meanwhile, he's moved on to the next house, and then he'll be able to refinance that one down the road. So a lot of times now we're getting people that are retaining their current VA loan, getting a new one, and then are going to take advantage of this as we go along. So
yeah, it's such a, I can get so passionate about this topic. And I know you can too, because we've talked about it a lot, but it's just like, there's so much opportunity right now for passive income through real estate. And I'm not saying being a landlord is easy. By no means. I know a great property manager if you need a referral to somebody to do that. But the equity that most people are seeing right now in their homes is going, just like the stock market, is going to diminish as the market, we're going to go to a low point, we're going to go high again. So while we're in this, we're coming off that bell curve of the high point in the market, we can still utilize all of the equity. So that's one thing I'll say before we sign off here too is, reach out to Tanner, find out more options, and reach out to me too. I'm talking to all my past clients over the next couple of weeks and trying to sit down with every single person to do an equity review. Totally complimentary, because I just want to come from a place of contribution. But find out what kind of equity you have. And maybe you don't want to be a landlord. Investing in real estate isn't your long-term financial plan. That's totally cool. You could still take that money and do about a million other things. I'm talking about college funds, financial planning. I mean, there's so much that can be done. And it's bananas. It's a huge world. And I think there's just so much conversation to be having around these topics. It's really exciting.
Yeah, absolutely.
Well, Tanner, thanks so much for your time. This was hugely informative. And to everybody out there, we're going to be trying to come to you on a regular basis, deep diving into information about not just the VA loan, but all different loan products. So if you have questions that you want us to address in the future, I promise we won't, bug you and drive you nuts, blow up your phone, but just drop them in the comments. We will make sure to address it on a future video. If it's more urgent, our phone numbers are across the bottom. Call us, text us, and we will make sure to take really good care of you. So
perfect.
Awesome, Tanner. Well, have a good rest of your day and try to stay dry this weekend too.
Sounds good. Thanks, Jess.
All right. We'll see you all soon.
Thanks.